Welcome to the better decision. $37.16. That is the fee Rajesh paid at a Western Union counter in Edison, New Jersey. A 57-year-old Indian man, a green card holder since 2014, working 12-hour shifts managing a Dunkin' Donuts franchise. Every single month for 9 years, he was sending money home to his aging mother in Lucknow and his younger brother's family in Kanpur. $2,800, like clockwork, the 15th of every month. 9 years, not a single month missed, not once, not until March 2026 when he missed a month. Not because he forgot, not because he chose to, because he could not, because his bank account was frozen. A hold placed by Bank of America, reason listed suspicious activity review pending federal inquiry. 48 hours later, 2 agents from Homeland Security Investigations were sitting in the parking lot of his Dunkin' Donuts location in Woodbridge, New Jersey. They were not there for coffee. They had a manila folder with 73 pages inside, every single Western Union receipt, going back years, every bank statement, his last 4 tax returns, neatly organized, tabbed and highlighted, total transfers identified, $293,000 over 9 years. They looked at his W-2 annual salary, $44,800, and they looked at the transfer total, they did the math, and then they asked one question. Mr. Sharma, how does a man earning $44,000 send $293,000 out of the country? He had a perfectly legal answer. He co-owns the franchise with his wife. She earns separately. He has rental income from a small property in Queens. All of it reported on his taxes. All of it legitimate, documented, and traceable above board. But that did not matter. The investigation was already open. The SAR had already been filed. His name was already in the FinCEN database. Once you are in that database, clearing your name takes time, money, and a lawyer who understands both immigration and financial law, and under the IRS-ICE data sharing agreement signed in April 2025, his tax return, the very document that proved his innocence, was the same document that put him on their radar in the first place. The thing designed to protect him became the thing that pragged him. Rajesh is fine today. He was cleared after 11 weeks and $9,000 in legal fees. But think about what 11 weeks of frozen accounts actually means. He could not pay his suppliers. He could not make payroll. He could not send his mother her monthly money. Everything he had built over nearly a decade was placed on hold, while the government reviewed paperwork he had already submitted every single year. His 9-year-old diabetic mother in Lucknow went 67 days without receiving funds from her son for the first time in nearly a decade. This is what the system does in 2026. Not to criminals, not to drug traffickers, not to money launderers, to ordinary Indian uncles running Dunkin' Donuts franchises and sending money home to their mothers. And the alarming part, Rajesh did nothing wrong. He never structured, he never hid income, he filed every tax return on time, he played by every single rule. He still got investigated because the rules have changed and nobody told him. Today I am going to tell you everything Rajesh did not know. 5 rules, 5 traps, 5 protections. By the end of this video, you will understand exactly how the United States government now tracks every dollar you send home, and exactly what you need to do so that you never become the next Rajesh. Let us begin. Let me start with the number everyone has heard, but almost nobody understands correctly. $10,000. Here is the law. Under the Bank Secrecy Act of 1970, every financial institution in the United States, every bank, every credit union, every check cashing store, every Western Union location, every MoneyGram counter, every Hawala agent is required by federal law to file a currency transaction report called a CTR with the Financial Crimes Enforcement Network, which is FinCEN, a division of the United States Treasury. This CTR must be filed anytime a customer conducts a cash transaction of $10,000 or more in a single business day. It does not matter if you are depositing, withdrawing, exchanging, or transferring. It does not matter what the purpose is. It does not matter how long you have been a customer of that institution. If the total in one day hits 10,000, a report is automatically generated and sent to FinCEN. No exceptions, no discretion. It is automatic. Now, here is what most people get wrong. They hear $10,000 and they think they have found a loophole. They think, okay, I will just send $9,999 and I am safe. That is not safe. That is a federal crime. It is called structuring, and it is codified under Title 31, United States Code, Section 5324. The law says, and I am reading the actual statute, no person shall, for the purpose of evading the reporting requirements, structure or assist in structuring any transaction with one or more domestic financial institutions. The penalty for violating this law is up to 5 years in federal prison, up to $250,000 in fines for individuals. So for corporations, the fine goes up to $500,000. This is not a gray area. This is not open to interpretation. It is clearly written into federal law. Let me give you a real case. In 2005, a man named Hasmukh Gandhi in Pearland, Texas, a convenience store owner, was sentenced to 2 years in federal prison for structuring. He made multiple cash deposits, each one just below $10,000. He thought he was being careful. He thought he was staying under the threshold. The bank noticed the pattern, filed a report. The IRS Criminal Investigation Division opened the case. He went to prison, not for theft, not for dealing drugs, for depositing his own money in a way that looked like he was trying to avoid a report. The point is simple. Do not try to outsmart the system by breaking your money into smaller amounts. The algorithm is specifically designed to catch exactly that behavior. Banks are trained to look for it. Their compliance officers are required to look for it. And if a bank suspects you of structuring, even if every single individual transaction is below $10,000, they will file a suspicious activity report, a SAR, and that SAR goes directly to FinCEN. Now, here is where it gets much worse for immigrants specifically. On November 28, 2025, FinCEN issued a new alert, and I have the document right here, titled Alert on Cross-Border Funds Transfers Involving Illegal Aliens. In this alert, FinCEN told every money service business in America, that means every Western Union, every MoneyGram, every Remitly agent, every check casher, every Hawala operator, that they must file a suspicious activity report for any transaction involving at least $2,000 if the MSB knows, suspects, or has reason to suspect that the funds are derived from unlawful employment or otherwise illicitly obtained. Let me repeat that number clearly. $2,000, not $10,000, $2,000. This means if you walk into a Western Union location and you are sending $2,100 to your family in India, Mexico, Pakistan, the Philippines, Nigeria, anywhere in the world, and the agent has reason to suspect your income source is questionable, they're legally required to file a SAR on you, a report that goes into a federal database, a report that can be accessed by law enforcement agencies across the country. What gives them reason to suspect? The FinCEN alert lists specific red flags, and when you read through them carefully, something becomes immediately clear. These red flags describe the completely normal financial behavior of millions of law-abiding immigrants across this country. Frequent transfers in round amounts, transfers that seem inconsistent with the sender's stated occupation, multiple transfers to different recipients in the same region, and use of multiple locations to avoid detection. Incomplete or inconsistent identification documents. Now, I want you to stop and think carefully about how many of these red flags apply to ordinary law-abiding immigrants who simply send money home every month. You drive Uber. You work construction. You work at a restaurant. You get paid weekly or bi-weekly. And every single month, you send $1,500, $2,000, $2,500 back home to your family. To the algorithm, that looks suspicious. The consistency looks suspicious. The round amounts look suspicious. Your job looks inconsistent with the volume of money moving. None of that means you did anything wrong, but it means a report can be filed. And when a report is filed, it travels far beyond the counter where you made your transfer. And here is the critical connection that most people completely miss. That SAR does not just sit in a FinCEN database gathering dust. It gets shared. Under the USA Patriot Act and subsequent executive orders, SARs can be accessed by over 300 federal, state, and local law enforcement agencies, 300 agencies with access to a report triggered by your $2,100 transfer. That includes ICE, that includes Homeland Security investigations, and that includes the FBI. The moment that SAR is filed, you are no longer just a customer standing at a Western Union counter. You are a name in a federal database that hundreds of agencies can pull up at any time. Now we get to the part that changed everything in 2025. This is the part that fundamentally altered the relationship between the tax system and immigration enforcement in this country. On April 7, 2025, Treasury Secretary Scott Bessent and DHS Secretary Kirstjen Nielsen signed a formal data sharing agreement between the Internal Revenue Service and Immigration and Customs Enforcement. Under this agreement, ICE can submit names and addresses of suspected undocumented immigrants to the IRS. The IRS then cross-references those names against its taxpayer database, your W-2s, your 1099s, your tax returns, your address history, and sends back confirmation of identity, address information, and employment data. In the first batch alone, I submitted 1.28 million names to the IRS. The IRS verified 47,289 of those individuals and sent their information back to ICE. So people who filed their taxes and people who did exactly what the government told them to do. That information handed directly to immigration enforcement because they were compliant. Let me say that again. So it lands properly, and 47,000 people had their tax data handed over to immigration enforcement based on that first submission alone. On May 30, 2025, US District Judge Dabney Friedrich denied a request by immigrant advocacy groups to block this data sharing. The court ruled that the shared information does not fall under the IRS privacy protections of Section 6103 of the Internal Revenue Code. The legal challenge failed. The pipeline remained open. Then, in February 2026, something even more alarming emerged. Tax Notes reported that the IRS admitted it had erroneously shared taxpayer information beyond what the agreement allowed. They accidentally gave PIE's data on people who were not even on the original request list. People who had nothing to do with any inquiry. Their information was shared anyway. So let me connect the dots for you. You file your taxes, which the government tells you to do. You report your income, which the government tells you to do. And you use an ITIN number because you do not have a social security number. And now that very same tax return, the document you created in order to be compliant, can be used to locate you, identify your employer, confirm your address, and hand all of that information to ICE for an enforcement action. This is not theory. This is not speculation. Court documents confirm it. IRS admissions confirm it. The data pipeline is live and it is actively being used right now. On top of the surveillance infrastructure I just described, there is now a new tax specifically designed to take money from immigrants who send funds abroad. The One Big Beautiful Bill Act, signed into law on July 4th, 2025, includes Section 4475, which imposes a 1% excise tax on all remittance transfers sent from the United States to any foreign country. It does not matter where you are sending the money. It does not matter who you are sending it to. It does not matter how long you have been sending it. It applies to every transfer that qualifies under the law. Let me read you the exact language. There is hereby imposed on any remittance transfer a tax equal to 1% of the amount of such transfer. The tax shall be paid by the sender. This tax took effect on January 1st, 2026. If you sent money home on January 2nd, 2026, using cash at a Western Union or MoneyGram location, you already paid this tax without necessarily knowing it, without being given advance notice in plain language. It was simply collected from you at the point of transaction, built into what you paid. Now, here is the critical exemption that changes everything depending on how you send your money. The 1% tax does not apply if your transfer is funded by, number 1, a withdrawal from a US bank account, number 2, a US issued debit card, number 3, a US issued credit card. The tax only applies to transfers funded with cash, money orders or cashier's checks. Let me give you a real-world example so the numbers are completely clear. You send $500 in cash to your mother in Mexico every single month. Under the new law, $5 per transaction goes directly to the federal government as excise tax. That is $60 per year. Over 10 years, that is $600 taken from you in tax alone, not in transfer fees, not in service charges, in federal tax on money you already earned, on money you already paid, income tax on you are being taxed twice on the same dollars. But here is the deeper problem, hiding inside that exemption. The exemption protects people who have US bank accounts. If you have a bank account and fund your transfer from it, you pay no remittance tax at all. But if you do not have a US bank account, perhaps because you do not have the documentation required to open one, perhaps because banks in your area have increasingly been closing accounts associated with immigrant customers, you are forced to use cash. And if you are forced to use cash, you are forced to pay the tax. There is no alternative route. There is no workaround available to you. You pay every single month, and every single one of those cash transactions is simultaneously being reported and monitored under the $2,000 SAR threshold I already explained. So you are not just paying an additional tax, you are generating a federal surveillance record every single time you send money home. Two consequences from one transaction, a financial cost and a legal exposure. So you're being taxed and surveilled at the same time. That is the 2026 reality. The numbers are significant. In 2024, immigrants in America sent over $93 billion in remittances abroad. These are not drug proceeds. This is not dirty money. This is money earned by working people in this country, sent home to support parents, siblings, and children who depend on it. The Congressional Budget Office estimates this 1% tax will generate nearly $10 billion over the next decade. That is $10 billion extracted directly from immigrant families who are simply trying to support the people they love. There is one more layer most people do not know about. One more piece of the surveillance infrastructure that was quietly built while most people were focused on the more prominent headlines. On March 11, 2025, FinCEN issued a geographic targeting order called AGTO specifically for money service businesses operating near the United States and Mexico border. Under this GTO, MSBs in designated border areas must file reports for all transactions above a specified lower threshold, a threshold significantly below the standard $10,000 CTR requirement. The exact threshold varies by region and by the specific MSB involved, but the directive explicitly requires enhanced monitoring of all cross-border remittance activity in those designated zones. The threshold is lower. The reporting is more frequent. The surveillance is more intense than what applies to the rest of the country. This means if you live in Texas, Arizona, New Mexico, or Southern California, and you use a local money transfer agent to send money home, your transactions face an even lower reporting bar than someone conducting the exact same transaction in New York, Chicago, or Minneapolis. Your zip code alone increases your exposure where you live, not what you did. Is what determines how closely you are watched. The GTO was issued under the authority of the USA Patriot Act Section 311, which allows FinCEN to designate geographic areas of primary money laundering concern. The practical effect is that millions of immigrant families living near the border face heightened financial surveillance simply because of where they chose to build their lives in this country. Now let me walk you through the full enforcement chain, step by step, so you can see exactly how a simple money transfer can ultimately lead to federal agents standing at your door. Step 1. You send money. You walk into a Western Union, use an app, or visit a local transfer agent. The MSB files a SAR or CTR with FinCEN. This happens automatically based on the thresholds and red flags I described. The individual agent at the counter does not make a judgment call. The compliance system makes the determination and the report is filed. Step 2. FinCEN's database flags the transaction based on pattern analysis over time. They are not looking at a single transfer in isolation. They are looking at your history. Multiple SARs from the same individual, high-frequency transfers, and amounts that appear inconsistent with your declared employment and the income you reported to the IRS. Step 3. Under the IRS-ICE data sharing agreement, ICE submits your name to the IRS. The IRS confirms whether you have filed taxes, what income you reported, what employer reported paying you, and what address appears on your most recent filing. Step 4. If your reported income does not match your transfer volume, and here is a concrete example. You reported $22,000 in annual income but transferred $45,000 abroad over the same period. That discrepancy triggers an investigation referral to Homeland Security investigations. The gap between what you declared and what you moved becomes the evidence against you. Step 5. HSI opens a case. They may conduct surveillance on your home. They may visit your workplace without warning. They may contact your employer directly. They may subpoena your bank records, your phone records, your full transaction history going back years. This entire chain, from a single report to federal agents at your door, can begin with a single $2,000 Western Union transfer, not $10,000, not even close to $10,000, $2,000. I do not want to simply lay out the dangers and leave you standing there without direction, and I want to protect you. So here are 5 concrete steps that every immigrant sending money home must take right now, before your next transfer, before the next month arrives. Step 1. Use electronic transfers from a US bank account whenever possible. If you have a bank account, use it. Do not go to a Western Union counter and pay in cash when you can initiate the exact same transfer electronically from your phone or your computer. Transfer funds through your bank directly, through a wire transfer or through a service like Wise or Remitly linked directly to your verified bank account. This approach avoids the 1% remittance tax entirely because the statutory exemption applies to bank-funded transfers. Beyond the direct tax savings, it also reduces the likelihood of a SAR being filed because electronic transfers from established verified bank accounts carry significantly lower suspicion scores in the FinCEN monitoring system. Verified identity plus verified income plus verified account means a lower risk profile on every transaction. Step 2. Never structure your transactions under any circumstances. Do not split a $12,000 transfer into 3 separate $4,000 transactions thinking you are staying below the radar. Do not use multiple transfer locations on the same day. Do not ask family members or friends to send money on your behalf in order to avoid individual thresholds. All of these behaviors every single one of them, constitute federal structuring under 31 U.S.C. 5324. The law does not care why you structured your transactions. It does not ask whether the underlying money was legitimate. The deliberate act of avoiding the reporting threshold is itself a crime, and the penalty is up to 5 years in federal prison, regardless of where the money came from. Step 3. Keep detailed and organized records of your income sources at all times. If an agent ever sits across from you and asks how you are sending more money than you appear to earn, you need documentation ready to answer that question immediately and convincingly. Keep your pay stubs organized going back at least 2 years. Keep your bank statements. Keep your annual tax returns. Keep your W-2s and your 1099s. So if you have rental income, keep those records separately and clearly labeled. If your income comes from multiple sources, document all of them and keep the documentation together in one place. You can access quickly. If your income is entirely legitimate, and for most people it is, documentation is your strongest and most complete defense against any investigation. Step 4. File your taxes properly and on time every single year. I know this sounds deeply counterintuitive after everything I just told you about the IRS-ICE data sharing pipeline, but here's the reality you have to face directly. Not filing taxes creates a completely separate set of serious problems that can be equally damaging. Penalties and interest that compound over time, the inability to adjust your immigration status, the inability to demonstrate continuous presence in the country when it matters most. These are consequences that can follow you for years. The key is to file correctly, to report everything accurately, and to understand that your tax data may be shared with other government agencies. Work with an immigration-aware tax professional who understands both sides of this issue and can help you file in a way that protects your interests. Step 5. Consider opening a joint bank account with a trusted family member who has proper documentation. Many banks allow joint accounts between individuals with different immigration statuses. If your spouse, sibling, or adult child has a social security number and a US bank account in good standing, and electronic transfers made from that account to your family abroad will not trigger the remittance tax and will carry a considerably lower surveillance profile than cash transactions processed in your name at a money service business counter. Let me put real numbers on this so you understand the total cost of sending money home in 2026 under 2 different sets of circumstances. These are not hypothetical scenarios built for illustration. These are the actual conditions that millions of people across this country are navigating in real time right now. Scenario 1. An undocumented worker with no US bank account who sends $2,000 per month in cash through Western Union to Mexico. Here is what that actually costs in full. The remittance tax is $20 per transaction. That is 1% of $2,000 collected by the federal government. Add to that the Western Union transfer fee, which runs approximately $10 to $15 depending on the specific location and the destination country. That is a monthly out-of-pocket cost of $30 to $35, and just in fees and federal tax. Before a single dollar reaches your family on the other side, over the course of a full year, the remittance tax alone costs you $240, not in transfer service charges and not in exchange rate losses. Just in federal excise tax. So on top of that financial drain, every single one of those 12 monthly transactions exceeds the $2,000 SAR threshold. That means up to 12 suspicious activity reports filed against your name in a single calendar year. 12 entries in the FinCEN database, 12 data points accumulating into a pattern that flags you for closer scrutiny and potential investigation. This is the precise situation that millions of undocumented immigrants currently find themselves in, and most of them have absolutely no idea it is happening Scenario 2. A green card holder with an established Chase bank account who sends $2,000 per month electronically via Zelle or wire transfer directly from their account. The monthly cost here looks completely different. Zero remittance tax, because the transfer is funded from a US bank account and falls squarely within the statutory exemption written into the law. Minimal SAR risk, because the sender has verified identity on file, verified income history, and a verified banking relationship. The only real cost is the transfer fee itself, which for wire transfers typically runs somewhere between $50 and $100 for the full year, depending on the institution and how frequently you transfer. That is the complete annual financial cost. Zero tax, zero SARS, zero FinCEN flags, zero federal database entries generated by your monthly transfers. The difference between these two scenarios is not simply a matter of dollars and cents. It is not just a calculation of how much money arrives at your family versus how much disappears in fees and taxes. The difference between these two scenarios is freedom. It is safety. It is the practical daily reality of whether federal agents ever develop a reason to investigate you, to visit your home, to contact your employer, or to subpoena your financial records. And the bank account in this environment is not merely a financial tool for convenience. In 2026, having and actively using a US bank account is a meaningful form of legal protection. And it is one of the most important practical steps you can take to reduce your exposure to the surveillance infrastructure that has been systematically built around immigrant remittances over the past several years. If you do not currently have one, making that your immediate priority could be one of the most consequential financial decisions you make this year. I need to address something directly, because I know from the conversations that happen in comment sections that many of you are currently using informal transfer systems. Hawala, Handi, FinCEN, it goes by different names depending on your community and your country of origin, but the basic mechanism is the same. You give money to a trusted local broker here, and your family receives the equivalent amount abroad through a corresponding network, without any formal financial institution involved at any step. I'm not here to lecture you about why you use it. I understand the practical reasons. It is frequently faster than bank wires. The fees are lower. The exchange rates are often better than what a bank or Western Union will give you. The agent speaks your language and understands your situation. And your family can pick up the money in cash locally from someone familiar, for communities that have been operating within these networks for generations. It can feel more reliable, more personal, and more trustworthy than dealing with a formal bank. I understand all of that context completely, but here is the legal reality you need to understand with absolute clarity. Operating as an unlicensed money service business in the United States is a federal crime under 18 U.S.C. 1960. The penalty for the operator running the network is up to 5 years in federal prison, but the legal exposure does not stop with the operator alone. If the funds transferred through that informal network are connected in any way to other criminal activity, tax evasion, immigration violations, anything at all, the penalty for those involved can escalate to 20 years. In the 2026 National Money Laundering Risk Assessment published by the US Treasury, Hawala networks are specifically identified as a high-risk typology for illicit cross-border transfers. That formal designation carries weight. It means FinCEN is actively looking for these networks and working to map their participants. It means law enforcement at multiple levels has been directed to prioritize their identification and disruption. Does this mean every single Hawala transaction automatically results in a prosecution? No, the reality is more layered than that. Most individual users sending money home through these networks are not the primary targets of federal investigations. The operators and the larger network infrastructure are the main focus. But here is the point that matters for you specifically. If you are already on FinCEN's radar because multiple SARs have been filed against your name. And if your name has already passed through the IRS-ICE data sharing pipeline, and then investigators also discover that you have been using unlicensed informal transfer networks, the legal exposure you face multiplies dramatically. Each piece of evidence reinforces the picture of someone deliberately operating outside the formal financial system. That picture becomes very difficult to explain away, even when the underlying transactions were entirely innocent and the money was entirely legitimate. My advice is straightforward and consistent. Stay inside the formal financial system. Yes, it costs more in fees. Yes, it is monitored more closely than you might prefer. But being inside the system with a proper, verifiable paper trail of your transactions is significantly safer than operating outside it with no documentation to prove your intentions. Let me summarize everything covered in this video with complete clarity so you walk away knowing precisely what the current landscape looks like and exactly what is at stake for you and your family. The $10,000 rule is not the real threat in 2026. It never truly was the central danger for ordinary immigrants sending money home. The $10,000 CTR threshold is old law from 1970. It is the number people repeat in conversations because it is the one they have always heard, but the actual threats that affect working immigrants in 2026 are newer, less widely understood, and in many ways far more dangerous in their practical application. The real threat is the $2,000 SAR threshold established by the November 2025 FinCEN alert, which specifically targets transfers by individuals whose income source may be in question. That threshold is low enough to capture the routine monthly transfers of millions of working immigrants who have done absolutely nothing illegal or improper. The real threat is the IRS-ICE data sharing pipeline, a formal government agreement that has already exposed 47,000 people, and that converts your tax return, the document you filed, in good faith to comply with the law, into a tool that immigration enforcement can use to locate you, identify your employer, and confirm your current address. The real threat is the 1% remittance tax created by the One Big Beautiful Bill Act, a tax that falls disproportionately and most heavily on cash users who are disproportionately undocumented immigrants who cannot access the bank accounts that would completely exempt them from paying it. The real threat is the geographic targeting orders that have established tighter surveillance zones along the southern border, creating a two-tiered monitoring system where immigrants in Texas, Arizona, New Mexico, and Southern California face a more intense level of financial scrutiny than anyone else in the country simply because of their zip code. Every single dollar you send home is now tracked, taxed, and potentially shared with immigration enforcement. That is not an exaggeration for effect. That is the precise legal and regulatory structure that currently exists and is actively operating every transfer, every month, every year. This is not conspiracy. This is not rumor circulating online. This is not someone making claims without basis. I have given you the statutes by name and section number. I have given you the FinCEN alert, title and date of issuance. I have given you the name of the federal judge who ruled on the challenge. I have given you the exact dollar thresholds written directly into the applicable laws and regulations. Every single claim made in this video is sourced, documented, and publicly verifiable by anyone who wants to look. Protect yourself, protect your family. Use the 5-step plan outlined in this video. Open a bank account if you do not have one, and make it your primary tool for sending money home. File your taxes accurately and completely every single year. Keep your income documentation organized and accessible. Never structure your transactions, no matter how tempting it seems. And share this video with every single person you know who sends money home to their family, because most of them are making decisions based on rules that changed years ago and nobody told them. If this video helped you understand something important that you did not know before today, I want to ask you to do one thing right now before you scroll past. Hit the like button. Not as a favor to me personally, but because it signals to the platform that this information is worth distributing to more people. So every tie tells the algorithm that this content deserves a wider audience. More reach means more immigrants protected before something goes wrong. It costs you nothing, and it takes less than 1 second. Subscribe to The Better Decision because this channel covers these issues every single week. The laws that affect your daily life, the regulatory changes that nobody explains to you in plain language, the agreements between government agencies that are signed quietly and then used to affect real people in very concrete ways. If you are not subscribed, you will miss information that could matter significantly to you and the people you am. Support. Drop a comment below right now. Tell me your actual situation, honestly. Are you currently sending money through Western Union or MoneyGram? Are you using cash for your transfers? Do you have a US bank account you are using for remittances? Are you using an informal transfer network? Do you live in a border state affected by the geographic targeting order? Write your situation in the comments below. I personally read every single comment and I will respond with guidance based on your specific circumstances. Before you close this video, I want you to take the 5 steps with you. Write them down if you need to. Use electronic bank transfers whenever possible. Never structure your transactions under any circumstances. Keep complete documentation of all your income sources, file your taxes properly and on time every year without exception. And consider a joint bank account with a documented family member if you do not currently have access to one on your own. These 5 steps will not make you completely invisible to the monitoring systems that exist. Nothing will accomplish that entirely, but they will meaningfully reduce your exposure at every level. They will mean that if your name ever surfaces in a database or triggers a review, you have a clear, documented, entirely legitimate explanation for every single dollar you sent. Next week, I am covering the 7 things you must delete from your phone before you land at a US airport. CBP's new electronic device search directive went into effect on April 28th. 2026, and it affects every single traveler entering this country, regardless of immigration status, regardless of citizenship. You do not want to miss that one. Until then, stay informed, stay protected, and I will see you in the next video. And this has been The Better Decision.